Welcome back. Now it's time for Forum Daily's weekly market update with Catherine Murray, host of the Buck Stops Here. Take it away, Catherine.
Thank you, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. We are seeing North American equity markets trade mixed today, with U.S. markets trading a little bit lower, Canadian equities a little bit higher. We have seen some nice gains, though, recently in the U.S. equity markets. U.S. dollar is slightly firmer versus the euro, but lower versus the Canadian dollar. Gold is up by about 0.4%, and we're also seeing some strength in the base metals. WTI, or the price of oil, has been up by about 2% today, following a bigger than expected crude inventory drawdown. But keep in mind that it is on track for weekly losses. The main headline news this week surrounds the U.S. Federal Reserve minutes. That, of course, impacts so many equity markets and asset classes across North America, which is why I highlight it, even for Canadian investors, of course. But importantly here, the minutes highlighted the concern about over-tightening, meaning that the U.S. Federal Reserve might actually have to slow down the pace and or the size of rate hikes. Investors have absolutely been anticipating this, which is one of the reasons why we have seen the market move off of the lows, up by about 19% off of those lows, which we have, of course, seen some significant drawdowns in the equity markets. Now, other bullish narratives that we're witnessing as well, investors believe that we have seen peak inflation. Sentiment and positioning has been very low. The FT, in fact, reported that quant funds have closed out their short positions, meaning that they're in the market buying stocks. Closing out those positions means you have to go out and buy the stocks back. So that's obviously very supportive for the equity markets. And they're probably also not putting on additional short positions, meaning that the selling pressure is being somewhat alleviated. So all of that is adding to the bullish narrative. B of A has a note out this week saying sentiment is no longer significantly negative. Earnings have generally come in a little bit better than feared. On the other hand, the bears out there would say that this is nothing more than a bear market bounce. Regarding earnings, as of late or this week, tech giant Cisco did beat on revenue as well as earnings, and also guided fiscal 2023 revenue ahead of consensus estimates. Management also said that they are not seeing any slowdown in demand. That stock's been up by about 6% today, and certainly is adding to the strength of the S&P as well as the Dow. On the retail front, Kohl's has cut their guidance, citing high inflation and dampened consumer demand. And Estee Lauder, their guidance was a little bit light, citing FX headwinds. Away from that, on the economic data front, U.S. existing home sales came in slightly below expectations, but they did have a positive surprise on the Philly Fed index, and initial claims fell once again. So taken together, probably the economic data in the United States a little bit softer, but still moving forward. In Canada, the TSX is slightly higher, but little changed on the week. As I mentioned, the Canadian dollar has been trading higher versus the US dollar. Earlier this week, though, the Canadian inflation number was 7.6%, in line with consensus, and down from 8.1% in June. Now, that is the headline inflation number. Core inflation, as I'm sure you're feeling, did in fact tick up. So you're not wrong when you're paying for your food and your fuel. Economists believe that this reading will not deter the Bank of Canada or the BOC from raising rates at their next meeting, which is September the 7th. And also, that is actually what the bond market interpreted as well, with rates rising, or in fact, the spread between the 2- and 10-year bonds in Canada widened over 50 basis points. So expect that rates here in Canada will likely continue to rise. On the stock news front, I would just highlight Air Canada. They announced that they will operate at 79% capacity of the pre-pandemic capacity. And on the global front, one item to really pay attention to is the divergence that we're seeing among central bankers, the divergence in policies. You've got some tightening, some loosening. The FOMC might ease the pace. The Bank of Canada looking to raise rates. ECB mulling over another big rate hike. That changes all of the foreign exchange markets, the currencies, how they trade, and of course the bond markets as well, and also what's supportive for equity markets. So a lot going on in terms of value, in terms of the valuations of asset classes. Lastly, I'll end here, Nima. Elon Musk, you may have seen, he's in the news again. It's not just about Twitter. He actually sent out a tweet suggesting that he might be interested in buying the English soccer team, Manchester United. It is publicly traded MANU, Man U. But then he sent another tweet out saying that he was just joking, but it impacts the stock price. I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern only on the News Forum Network. All right, stay with us. We'll be right back after a short break with more news from around the world. Stay tuned.